I'm Virginia McGathey here on the floor at the CME Group reporting on the livestock market. Today, cattle was rising and started to build some momentum, and with the better than expected cash trade that really ended on Friday, gave the market a boost today. Interestingly enough, we was building momentum all day and really did hit limit up. One of the reasons why the markets are moving as strong as they are is because they are very thin. Many traders have moved to the sidelines and opened the doors to a lot of volatility. Now, meat packers did pay lower than last week, but it's still higher overall, and it helps to create that momentum and get that market rolling. And it really was hit limit up before the feeders did, but the feeders were also firm. Those meat packers were actually lowering their bids, but the market still started to drive it a little bit higher, and it still needs to secure some of these supplies here early in the week, and I think that's where you started to get a little bit of that scramble, and it gave the futures a little bit of a boost. Now, the on-feed report is coming up on Friday. They're expecting it to be actually about 3% lower than last year. Interestingly enough, if that really happens, I think that we're going to see a lot more volatility in the market. But looking good overall. I think a lot of the ranchers are hoping that this is going to an indication that there is increased beef demand, and kind of stay away from anything that's happening with the tariffs. And speaking of tariffs, it's really having an effect on the hog market. The hogs did slip today. The pork values, the carcass values really continued to erode and really stepping on the neck of the futures. The physical hog prices just showed a weaker outlook really for the next couple of months and for the rest of the summer, and it makes it very difficult to keep these futures higher. I think that we've had some oversupplies that started to build because Mexico stopped taking some of our pork products that we normally have been trading with them, but since the tariffs and the NAFTA troubles, they have slowed somewhat. At one point, we really thought that they were still going to be taking most of our pork products, even regardless of the tariffs, because it was still a better deal for them. But they have slowed on that, and right now the tariff troubles, the talk about it is really on the back burner now that our president is in Helsinki and they're talking about deals with Russia. We haven't been talking about it, and there is some tariff fatigue going on, but our markets are really depressed as far as volume goes, and so it's a little bit difficult to kind of show where we're going to go from here. But we are pretty much in the basement for the hogs, and they're suffering the most right now. And of course, that we expect slower sales in the late summer anyway, and so coupled with that, that's really got that sinking feeling. So a lot of bearish trends for that hog market. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.